Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Asian markets did open mildly in the green, however, now they've slipped into the red.
This is perhaps a decent time to raise some cash levels and wait for the right opportunities. The market perhaps this year will give you a decent correction.
BPL has been a star in 2017, gained close to 7.5 times in last year, and in 2000 itself, it has lost close to 22% of investors' wealth.
That's the market opening, 27 points higher, 28 higher on the Nifty, 10,740 now.
I think the market is still, or the circumstances are still not positive enough for a breakout on the upside.
Standing committee meeting on energy to specifically discuss the RBI circular which could have impact on the NPA of the power sector has been postponed to a later date.
We do around 25 lakh transactions a month.
IFL holding will cease to exist and 3 companies will get independently listed.
City gas distribution companies have been in focus, and Mahanagar Gas is one stock that has fallen 25% this year.
Market, which is almost at the day's highest point, 59 points, almost 60 now, 10,770 is where we're at. The Sensex is up about 240 points, 35,524.
Okay, what difference 24-hour has made. Yesterday at this point, you were talking about a breakdown for market. Look at how the screen has turned, and this is the case globally, not just for India. If you see most of the emerging markets, they have seen similar kind of run today. This is Closing Bell. I'm Anuj. With me is Surabhi. Hi Surabhi, good afternoon.
Good afternoon, absolutely, Anuj. I mean, yesterday people were talking doomsday scenario, trade wars, etc. But everything's turned around today. For our market, I guess some of these technical levels, at least the 10,700 markets, it's become the sacrosanct line, right? And your thought on the banks today, because banks have come out all guns blazing.
Yeah, I think the indications are there on the bank Nifty, Surabhi. Even yesterday, the bank Nifty was down all of 0.5% after all the negative news. And the reason is very simple. HDFC Bank and ICICI Bank both are seeing buying at lower levels. And HDFC Bank in particular has really been strong. Reliance has been doing well. So at index level, it's a lot of stocks are doing well right now. A lot of this, of course, is post-facto analysis, right? I mean, yesterday we were looking at the market and looking at the probability of a breakdown. This is going to be this kind of a year. And there's a good chance that, if you're buying now, perhaps the market again punishes you tomorrow or day after. So it's a market in which you have to basically respect the range. You have to buy the dips, you have to sell the rally. But for today, I think what stands out is that the 20 DMA and the important support level has been respected and the market's moved on. Even the mid-caps have recovered actually from the low point of the day. And really, you have 3 or 4 leadership stocks now. This year, your portfolio really has to be in the leadership sectors. We've been talking about it ad nauseum. The HDFC twins, the Bajaj Finances of the world, they will do well. The rest, I think there's going to be a bit of volatility this time.
Okay, well, it's been a steady day so far. Not too much of volatility. The VIX is actually down. The India VIX about 3-4%. So we've got quite some ground to cover over the last 1 hour. Here's what's lined up on Closing Bell today. Author and portfolio manager Basant Maheshwari is going to be joining in. He's our alpha manager for the day, looking at the markets at this very interesting juncture. We'll get chatting with him. Also, fundamentals on a lot of stocks being discussed with Mr. S.P. Tulsian of sptulsian.com, R. Sri Shankar of Prabhudas Leeladhar, and Prashant Prabhakaran of Yes Securities. As always, technical advice coming your way with our tech experts. So we will have Prakash Gaba as well as Mitesh Thakkar joining in just a moment.
Okay, but how should you position yourself in this last hour of trade? We have Mitesh Thakkar up front, and of course, Prakash Gaba will also join us. Mitesh, good afternoon. Thoughts on this this move on the market and your last hour calls now?
Yeah, afternoon, Anuj. I think yesterday, we advised cutting down on short positions because we were close to support zones of 10,700, 680. I think that level is holding out. So while I don't expect a big up move from here, I think as long as that level is respected, I think we might just chop around between 10,700 to about 10,820, 825 on the upside for the next few days. And it might not be a very, a clear trending market, but still a contracting market. So therefore, the trading has to be more of stock-specific side. The recommendation that I have right now also is one buy and one sell. Sorry, in fact, I've got 2 buy calls. Reliance Infra is a buy with a stop at 434 for targets of 455. And Ajanta Pharma, after 3-4 days of pullback, is close to support area. So the risk-reward equation is quite good. That's a buy with a stop at 1028 for targets of 1084.
Okay, so going with 2 buy calls for the last hour, Reliance Infra and Ajanta Pharma are Mitesh's picks. Prakash Gaba is also with us. Afternoon, Prakash. So far, so good for the bulls. They've been holding that 10,700 level. What are your trades now?
Yeah, I feel still that we are still into a reactive up move because the crucial level has still not been crossed. And I would say that I have 2 stocks here. One is Kotak Mahindra Bank. That still looks good to me. Very good chance that Kotak Mahindra Bank can climb up to levels closer to 1330 zones. Stop below 1305 should be fine on Kotak Mahindra Bank. And I like Tata Motors as well. Looks like the base formation is good. Up move could continue from here, and technical targets from the upside could be in the vicinity of 311. Stop below 306.
Okay, that's a couple of buy calls right now. The stock that's surging right now is, or making a move right now, is Adani Enterprise. In fact, the entire Adani group. Just looking at some of these stocks, Adani Enterprises in particular has moved to the high point of the day. Look at that move. And the other one that stands out is Maruti. For last few days now, Maruti has been showing some kind of traction. So that also is quite interesting. Just see the chart of Maruti now at the high point. SP Tulsian of sptulsian.com and Prakash Diwan with us. Good afternoon, Mr. Tulsian. Your thoughts first on Maruti. We've seen a move here after some time. You reckon it's a good place to be buying here?
Yes, Anuj. In fact, stock has been moving for maybe last couple of weeks. Yesterday, maybe because of some profit booking or maybe what you call neutral call having released by one investment banker, probably that may have seen the corrections yesterday or maybe in line with the weak market. But I think that Maruti is seen to be an evergreen stock. And in fact, since it has been ruling at the level of 86, 8700, since then we have been giving a buy call on the stock. And I think that maybe in the next 3 to 4 months, again, you may see the stocks moving back to the level of 9,900, if not 10,000, because the level which it has touched earlier and then corrected thereafter, maybe by 1,400 rupees. Because if you really see the sales performance for 2 months, April and May, that have been seen phenomenal. I don't think that there is any kind of problem seen with the sales going ahead. In fact, companies focusing more on the high margin, high end products or models, and looking to quickly release the waiting list also, and won't be surprised to see the sales performance of about 2 million plus vehicles for FY19. So taking all this into consideration, the positive bias remains intact on Maruti, and buying is advised at the current level.
Okay, that's a positive view on Maruti. One more stock that's on the move right now is NIIT Tech. We can perhaps pull it up, 3% up on this one. It's not a universal all-out mid-cap IT move today. NIIT Tech is finding some buyers, as is Tata Elxsi. Firstsource is still looking at some pressure. It started yesterday with that 6% cut. Today it's another 2.5% down for that stock. So it's slightly mixed, the trends in this market. Prakash Diwan is also with us. Prakash, these are the big boys and the big mid-cap IT stars. Now, I mean, Tata Elxsi, NIIT Tech. I am also hearing views in the market where a lot of fund managers also seem to be suggesting that the best of the IT rally is over. I don't know if you agree with that view. What would you do with these two?
I think it's more of a calendar effect, just because it started in end calendar 2017. It's been 6 months, and people find a new pocket like pharma, which starts sounding promising. And of course, both of them have very, very different underlying, texture in terms of growth. But I don't believe that IT is done and over with yet. In fact, it's just the beginning of a fairly secular move. And let's look at what's driving IT. Finally, we have seen all that slumber go off, and people have started talking about guidance, which is making sense. The US companies are doing well. And if Donald Trump has his way, he'll have the likes of Google and Apple come back into the US, do much more work, and the downstream impact of what's happening on changes in insurance out there, health insurance particularly. So I think quite a few of these companies have gone through the tough phase, done the belt tightening, become very efficient on the cost side. Look at Infosys talking about a development center in Europe. I mean, you don't hear about these kind of adventures if things were not looking up. Yeah. So my sense is IT definitely is there, but you need to be careful. We've spoken about Tata Elxsi, if you recall, about 10 days back, and that time was about 1180, saying, you want a multi-bagger. And this was when we were talking about Infosys finishing its anniversary, and it was a multi-bagger. So what's the next one? And then, you have to look at things like this. I keep on talking about the likes of a Zensar, which is again, making moves. It has its unique strength, backed by PE ownership. So I think IT is definitely yet not lost its steam. You've got to be slightly selective. Don't get tired buying everything and anything there. Be slightly selective, but on a bottom-up basis, it still has a lot of promise.
Okay, a lot of stocks making a move now. Of course, the big strength for the market today has come from HDFC Bank. That especially on the bank nifty, that is always the case. 1% move, 1.5% move in HDFC Bank is sufficient to make the bank nifty move big, because you're talking about almost 1.3% move on HDFC Bank, and you're talking about almost 0.6, 0.7% or 0.5% move on the bank nifty purely on account of that. And then of course others can also chip in. Mr. Tulsian, thoughts on Interglobe Aviation? Of course, this morning it started a bit soft because of that the data, but now we're hearing some source-based news that there has been some issue, and perhaps there's been some summon to the management as well. Is this a weakness that you would buy into, or would you avoid the stock?
See, I don't think that the data were really seen to be so disappointing, because that was definitely the cause of the stocks to correct. But FEMA violation and ED issuing this summons, and which has been seen for the last 3 years, is seem to be a bit scary, because you do not know, maybe the things may not turn out to be so ugly. But these kind of things, you cannot take a call, or you can't predict that what will really be the situation on that account. And if that gets intensified, then definitely it will have its negative effect on the stock. So maybe taking that into consideration, if you are a cautious investor, then you can wait to buy. But as a medium-term investor, and if you are taking a pure call on the aviation sector, then probably at 1100 rupees is the level to look into.
Okay, look at the twins on the move, REC and PFC. There's a big surge on both of the stocks underway. Buying suddenly coming in the last few minutes of trade. So yeah, from the lows, there are big spikes taking place on these stocks. But otherwise, if you look at it, 12 months, erratic, very erratic on these, barring the trading rallies. Mr. Tulsian, there's so much of noise now surrounding whether we'll see a bad bang for stressed power assets, whether we'll see an AMC, an ARC. Don't know what this Parivartan plan will really do. How do you view these two stocks now?
See, in fact, maybe in the hunting the value section, I've said that PFC seem to have bottomed out. Even if you don't take a call on these things, definitely the government is trying their best, and they will do their best. But if you take a call specifically on PFC, because if you compare both the stocks, PFC and REC, both are having virtually the same fundamentals in terms of the top line, in terms of the NIM, in terms of the provisions, in terms of the EPS, in terms of the dividend payout and all that. But in spite of that, the REC is seen ruling a bit expensive. If you take, maybe the book value of PFC is at 150, while REC is at 180 or maybe 184 as on 31st March 2018. So maybe that, except for those difference, if you take a call on the market cap is closer to about 24,000 crore for both. Loan book size is same, 2 lakh crore plus. So taking all this into account, in fact, I've said that 3-4 days back in that hunting the value section, that I see huge value, existing for PFC, irrespective of the move, on resolutions of the stress assets and all that. That will definitely be seen positive. But going ahead, because 82% of the book is seen to be the standard assets. I'm talking for the PFC. In fact, that can get applied for REC Limited as well. So if you have a differential valuations, existing in spite of the same size for both the companies, I think PFC looks a better buy. But otherwise, also keeping mild positive bias on both the stocks to buy at the current level.
Oh yes, both these stocks moving up big. In fact, let's not lose sight of PTC as well. That's also in the same category. In fact, I see the chart of that one along with REC and PFC. That also right now making high of the day. That's of course REC. Not ITC, PTC is the stock that we are referring to at this point in time, and that one also making a move. PFC and PTC as well making a big move. Prakash, your thoughts on this space and anything that you would want to buy, Prakash Diwan?
Yeah, so I think I agree with what Mr. Tulsian is talking about. This is, some of these companies are particularly PFC, PTC, they are offering such great value from a fundamental book value perspective. I mean, you're getting things at almost like, you know, what the books tell you, and the books have been beaten down in the past, so it's not something that you are overpaying. Dividend yields is another angle to look at these favorably, but the government's intent to set things right in this sector is what's going to re-rate these stocks more than any changes in the fundamental, which we'll see in the next 2 quarters. So if you are a believer in, you know, whether the government can do what they did with coal and with some of the other languishing sectors, and then they're talking about a national electric supply company which will harmonize these mismatches, and this has been triggered by the Gujarat experience. You know, after years of power surplus, suddenly Gujarat is paying through its nose to buy power, and you know, all that tells you that we still have a lot of arbitrage that's negatively prevalent in the power supply side. So Power Trading Corporation, which is like an exchange, has much more of a role that it can play, provided, you know, you unshackle the structure. So I think PTC, PFC and REC, this would be the pecking order if I had to allocate, and then it would be a 40-30, maybe a 40-35-25 kind of an allocation if you had to make. But these companies definitely are worth looking at these levels.
Okay, so PTC on top and then REC and PFC.
PTC, PFC and then REC.
PTC, PFC and then REC.
Yeah.
Mitesh, a technical check on all these 3 names. This really is the sector of the moment now. Just look at some of these stocks.
Yeah. So I think, you know, if you look at the last few weeks of movement, both these PFC and REC stocks have fallen a lot. And then we saw some kind of mild pullback and then consolidation. So I think that consolidation phase is still on. REC, I think, is doing a range of about 120 to about 108. A break on the upside should give you 140 very soon. Similarly, PFC, I think, in the last few weeks, in fact 2 weeks, is doing a range of about 79 to roughly about 85. And I would want to see the stock get past 85, and then we can see some kind of a trend developing over there on the upside.
Okay, all right, gentlemen, stocks on the move. We've got our eye on the screen right now. However, a quick break. On the other side, it will be time to get chatting with our alpha manager of the day, Basant Maheshwari, joining in. We'll get his call on the market. He has an interesting take. He's watching politics very, very carefully. More of that conversation coming up on the other side. Welcome back. 10,766, building on gains, pretty much a day's high. And stocks, the leaders continue to be the same. Reliance, obviously, along with the likes of HDFC Bank, are batting for the bulls today. Let's get some more trading ideas in. We have Sandeep Pagle with us. Sandeep, what are you working with today?
Afternoon, Surbi. I would go with the buy in a NIIT Tech, stop loss of 1121, target 1161, and a sell in a UBL, stop loss 1268. 1236.
Okay, buy in NIIT Tech, sell in UBL. Thanks a lot for those calls, Sandeep. The cuts in Indigo are now getting deeper in a strong market. That stock is now down about 7%. Just pull out the intraday chart on that, because there was one very minor pullback that's been sold into, and how, and in fact, 7% lower is. Excuse me, what size?
Yeah, no, I mean, that's a stock that's really, really under pressure. Of course, the fresh news was that the FEMA probe, which has been ongoing for several years, is more questioning now. The ED is involved, so those headlines definitely haven't worked. But Prakash Devan, this stock obviously has been going through the doldrums. Q4 onwards, there was just no looking back. What about something like a Spice Jet, its peer? Jet has also fallen so much. I mean, is there any reason to look around from a portfolio point of view, not for a trade, at these very heavily beaten down aviation names at all?
I think the answer is yes, because you know, if you specifically, let's look at Indigo. Interglobe has come down today because of the FEMA implication, and this could now also explain maybe the Aditya Ghosh exit. You know, I'm sure there'll be some joining the dots which will happen, but on the ground, whether Indigo's service revenue or business operational revenue comes down because of this, I don't think so. But Spice has been very quietly expanding routes, making a lot of new strides in terms of their fare flexibility, the options that they're giving. exactly what Indigo did about 4 or 5 years back. So Spice is trying to take a leaf out of the Indigo book and say, okay, we could also do that. They've innovated on food delivery. They've innovated on, as I said, the pricing points. So I think Spice is definitely looking very positive. The only thing that goes against it, it's not on the NSE, so a lot of large trades don't happen there, and a lot of investors don't look at it institutionally, I know for sure. But I think I would definitely look at that. Jet is in a repair mode, but the repair could be quite painfully long. So, it has the debt issues to grapple with. So I think if Indigo blinks, Spice will benefit much more.
Okay, Adani Power has moved to high point. You just referred to Adani Enterprises. That one is making a bit of a move right now. Keep an eye on Bajaj Finserv. For the last 2-3 days, we've been pointing out how Bajaj Finance has been making a new high. Right now, the move is happening on Finserv. That one, just see the chart, that stock moving to the high point at this point in time. So let's see how some of these stocks move from here. Before I thank you, Mr. Tulsian, I wanted your thoughts on Sun TV. There's been a bit of a correction here. Even today, when the market's been strong, it's now making fresh lows. There was a report that perhaps it's losing market share in Tamil market. Would that be a big concern?
See, Anuj, I think that maybe that fear will always, that kind of negative news will always see the fear building up, and we'll see the stock price, getting corrected. But I don't think that on the valuation front you have any complaint. In fact, if you don't have any kind of fresh statutory, action seen getting initiated against the promoters, I don't think that there is any kind of fear on that account. Because if you really take a call on the other channels, they have not been able to make their inroads, and can give a big competition. When you talk to the other regional players, that's not seen happening. So we are not taking a negative view on the Sun TV at the current valuation.
Okay, Ms. Tulsian, thanks a lot for your time today. Of course, we'll have fresh discussion with you tomorrow. Time to welcome our Alpha Manager, Basant Maheshwari, author and portfolio manager at Basant Maheshwari Wealth Advisors, now joins us. Basant, good afternoon. Reading some of your tweets, the classical rule of a bear market that most stocks without earning supports fall lower to the level from where they started. I'm not asking, is this a bear market? But, I wanted your thoughts on what's happening in the broader markets. We've seen quite a bit of fall in a lot of stocks. Of course, the Manpasants and Vakrangis of the world are down quite a bit. But, on an average, we've seen stocks fall quite a bit. Your thoughts on the broader market?
Good afternoon, Anuj. The broader market is dichotomized from the center. If you look at the Nifty, you say, what's the problem? It's down only 5, 6, 7%. But money was never made buying Nifty stocks, and now money is not lost buying the Nifty stocks. The real flavor, the real, the stocks that people really chase are the small caps and the mid caps, and that's where the pain is. So if you look at an average portfolio, it's down 25, 30, 35% from January till now. And if you're down 33% from the top, you need to go back 50% just to break even. So it's like the asking run rate in a cricket match. So if you play one maiden over, then you have to hit 2 sixes in the next. So I think to that extent, the story seems a little difficult for the small caps, the micro caps, the mid caps. I have nothing against the caps. I mean, the size of the cap doesn't determine whether you're going to make money or not. Vakrangi was a large cap. It was a hat rather at 50,000 crores, but it fell. So you have to be with quality. You have to be with earnings, and the market is getting very narrow at the moment. So when the market gets narrow, suddenly you find predictability, surety, and certainty fetches top dollar, and anything where there is even an iota of doubt, gets hammered down. So that's what's happening right now.
So, Basant, good afternoon. It also is a very interesting, I'm guessing, very lucrative time for value investors like yourselves, because yes, values are coming down. And I think one area where all value investors finally hit jackpot is pharma. How have you approached things in the last month? Because you have got pockets where there is a, as you said, 30, 40, 50% correction.
Surabhi, if stock market is a religion, value is God. And there are different ways to reach God. So you can see God in a church, in a mandir, mosque, in a gurudwara. It depends on where you find your God. And there are people who are atheists who say there are no God, but it doesn't mean that they die the next minute. So value is a very subjective thing. The biggest thing on value is who decides value. At least not the people who tweet on Twitter. They don't decide value. Value is decided over a period of time. And some people look at value on the basis of what has happened in the past. That's what they say. If the company has a land bank, it has cash on books, it has a low PE ratio. Some look at value on the basis of not what the company has done, but on the basis of what it can do. So we are more in the latter camp, where we take a leap of faith and we say, okay, FY20, FY21, FY22, this company could hit that point. So we are more in that club, and that is why we look for companies that are growing fast, that are growing earnings, that have a decent ROE, and that are capturing market share. The cliched dialogue which I keep giving every time. So looking at that, we find value in the consumer space and in the NBFCs and the odd stock here and there. But mostly our bets are in the consumer space and in the NBFCs, and especially in the high growth segment.
Okay, fair enough. Let's discuss some big market events, Basant. What have you made of the recent noise from the US? It's no longer noise, actually. It's translating into reality, the trade war. This year we'll have big state elections, and the jury is out on whether we could have a general election as well in November. Do you think the market priced those risks in yet?
Two things about the trade war. I mean, if you look at it optically, it's very nerve-wracking to see what's going to happen when the two tigers in the zoo, they fight against each other. Rather, one elephant and one tiger. In the zoo, they fight against each other. So obviously, as peacocks and hens and camels and sheep, we can just stay back and say, okay, let them end the fight. But I think it's more of posturing. See what Trump did to North Korea, Kim Jong-un, where last year, this time, we were discussing whether the next missile from North Korea will land into the Sea of Japan or is going to land on Seoul. But then they held hands together, they walked through the evening, they had a nice dinner, they had good lunch, they had breakfast, and they were friends. So I think Trump is a great businessman, he's a hard negotiator, and I think it's all posturing. Trump understands business like nobody else. His entire cabinet, his advisors are filled with Wall Street veterans, if you might know it more than me. So I think they'll tell him, yeah, you just can't let the Dow crack. And unlike our country where the government doesn't care whether the Nifty goes to 6,000 or to 9,000 or 10,000, in America, a major proportion of their citizens are invested into the stock market, either through the 401ks or whatever. So their government is pretty much aware of the risks to the Dow and the NASDAQ. So to that extent, I think it's all posturing. It's going to come and go. But in our case, I think our market doesn't price in Modi not coming back. That's because we love and like Modi so much. We just cannot visualize a situation that Modi is not there. Modi, Anuj, to my mind, is like an MS Dhoni in cricket. So even if you have 2 overs left and you have Dhoni on the screen, you say, no, ye kuch kar dega, ye chakka maar dega. So with Modi, whatever he does, we give him another chance, like we do it with MS Dhoni. But Dhoni hasn't won us every match, and I think next year could be difficult for Modi.
So are you actually saying there's a possibility, I mean, I don't know, is that a suggestion that you are currently working with, that Dhoni could get run out? Everybody can get run out, right? Or, caught out.
Yeah, I mean that's a tough game. It's not. I mean, I'm not at all competent to look at that. But like I tell my friends, we have to Mamta-proof our portfolio. So assume a situation where the government that you want to be in power isn't there. So what do? You Mamta-proof your portfolio because the Bharat Mala won't be there. So you have to look at those things, and then you have to go back.
You have to Mamta-proof your portfolio. You have to Mayawati-proof, perhaps. You have to Akhilesh-proof. You have to. A lot of people would say even perhaps Rahul Gandhi-proof your portfolio. Where do you stop?
And how do you do it, more importantly?
Anuj, if you can Mamta-proof your portfolio, wait. Anuj, if you can Mamta-proof your portfolio, you can proof it against everybody. Because I am from the city where Didi is here, and I know what's happening here. Okay. So I think that's the yardstick. That's the high water mark. So if you can Mamta-proof it, you can do it. So what do you do?
Quite brave of you to be sitting in Kolkata and saying this.
They haven't fallen to. Pardon?
Quite brave of you to be sitting in Kolkata and saying
this. That's how I've been all this while. So.
But Basant, to take the conversation...
No, I just assumed that I'll shift to Bombay closer to you in that case.
Fair enough, but right now...
What I'm trying to tell you is, assume a situation...
Yeah, please finish.
So, assume a situation where the Bharatmala doesn't get extended, right? What happens to all these infra companies? What happens to all the aspirations, all those FY20, FY21, FY22 Excel sheets? I'm not saying this is going to happen. And let me tell you, Anuj, I'm more than 100% invested personally, and I intend to remain that way, irrespective of whether the country is ruled by Mamata Banerjee or Mayawati or anybody, because I've been that way for the last 25, 26 years, always fully invested into equities. We don't have any debt or anything as an asset class. But still, there are ways to look at things and there are ways to approach a situation. So I think consumer and really high quality consumer financiers and anything that's related to high quality and maybe large caps, not caps because of the size of the cap, but because they are efficient businesses, they are growing at a steady pace and taking away market share. I think that's how we should approach the thing.
But that's the thing, right, Basant? Now, you obviously have been an early investor. So some of these consumption stocks, retail stocks that you like so much, even NBFCs, they're anything but cheap. So for someone who needs to quote unquote Mamata proof their portfolio, whatever, political proof their portfolio, should these still be the go-to areas instead of going for something which is down 20-30% where you're hoping for a turnaround, like say PSU banks?
Like, I mean, the best way to play it safe and to play it well is by the private sector banks, the IndusInd, the Kotaks, and the HDFC banks. I mean, we don't own it because they are very cliched and they're going to give you 20-22%. But that's one way of looking at it. See, 6 months back, we all thought that PSU banks were cheap, and suddenly see what has happened. And look at the economic setup. 25% of the PSU banks cannot lend. They have been stopped by RBI. 75% are focusing on getting the recoveries back so they can reduce their NPA. So there's an entire economy waiting like hungry wolves for money, and that's where the private sector jumps in. So with some of these private sector guys, it's not whether they can grow at 50%, but it's about how much they want to grow. So I think because of that, there is an economic shift in growth happening from the public space to the private space. But if the market falls because of a political event or because of any event, all stocks will fall. Just the good ones recover faster, so they recover better, and that's where you can also have a good sleep at night also.
Okay, by the way, don't lose sight of market now. 300 points higher on the Bank Nifty now. And what has happened all of a sudden is that the Bank Nifty futures, which yesterday, of course, has slipped into a discount, have now moved into a premium. And just see that chart on the Nifty Bank. That's now up 302 points. HDFC Bank, Kotak Mahindra Bank, all these stocks, of course, doing quite well. So just don't lose sight of that big move that you're seeing right now. Of course, driven by HDFC Bank, but a couple of others as well joining in the fund. So things looking quite good at this point in time. Finally, before we thank you, Basant, any mid-cap theme that you're backing in the past? Of course, you have been invested in stocks like Page Industries, a couple of housing finance stocks did well for you. Anything that is looking interesting now?
No, nothing new, Anuj. Just that we are mostly into consumer and anything that finances the consumer. So to that extent, Bajaj Finance, it's amongst the top 2 holdings for us, and it's doing well. And we want to be with such companies even if they are expensive, because the best part is even if you buy it at a wrong price, you won't lose your capital. You'll get your capital. All it needs is a patient investor. So that's how we are positioned right now.
Fair enough, Basant. Always good talking to you. Thanks a lot for your time today. And of course, we'll keep having these interesting discussions. Before we take a break, Prakash, you had recommended Kotak, I think, was it, at the start of the show? Big move on the Bank Nifty right now.
Absolutely. I mean, this actually has crossed a very crucial level of 25,522, which basically means I think the tides have turned.
And so quickly, I mean, within, as Anuj was saying, 24 hours, a really long time in the market's life. We are pretty much at the day's high right now. We need to take a quick break. We'll come back on the other side. Good time to get some last half-hour calls going, which you can carry over till tomorrow. Back with our experts in a moment.